Hey, welcome back everybody, and in this video I'm going to be breaking down the footprint chart, okay, and I'm going to show you every single type of situation that can happen in the footprint, how to trade it, how to actually read it correctly, and so forth. So let's jump into the charts. Now, if you're getting into order flow and footprint trading, you really got to understand what you're actually seeing here. And sadly, it's not as simple as just chasing high volume. I wish it was. I really, really wish it was. But there's so much more to it. So we're going to go to yesterday's, today's Saturday, so the market's closed. But we're going to go to Friday's open, New York Open, right here. And we're going to have a look at the footprint, okay? Now, this is the delta footprint, so this is essentially the difference between the buyers and sellers, okay? So some people have the buy and sell, and if I show you the buy and sell footprint, you'll understand what I'm talking about. So at the bottom here, there were 10 contracts sold, 29 bought. Obviously, the difference between 10 and 29 is 19, so the delta would be 19, okay? Really, really simple. And I like to have the delta footprint because I like to see the difference, okay? Now, what is it actually showing? When you see the footprint, what are you actually seeing, okay? So in every market, there are aggressive and passive participants, okay? Aggressive people are the people literally hitting, buy and sell. Those are market orders. Those people will appear on the footprint, okay? Only market orders will appear on a footprint, because technically there's no such thing as delta in trading, because every order, no matter what it is, right? If you enter a buy, someone out there has sold you that. You've been matched up with a seller, okay? That is literally why it's called trading. You're always making trades, right? So technically, there is no delta. So the delta you're seeing is only the delta of aggressive participants. The difference between how many people are hitting sell and how many people are hitting buy, okay? Now, those are market orders, right? And they appear on the footprint. But the other side of the order doesn't appear, so the passive people. Now, if you know about the DOM, the depth of market, the order book, so here's the depth of market. This is a nice little graphic I saw online of the depth of market. And if we zoom in, what you're actually seeing here is really simple, right? So everything on the left, on the right-hand side where it says sell, okay, these are all sell limits, okay? So anytime you have a pending order, right? Imagine right now, for example, you put a sell limit order, once price reaches, 24,929, right here, I want it to sell. So, you can right click and then, do order and put a pending order. And then obviously when the market gets there, it triggers it and you're in a sell, right? Those are sell limits. And then on the bottom, these are buy limits, all right? That's all it ever shows, okay? And the same thing with the buy limits. Once the price gets to 760, I want it to buy. So when it gets there, it gets triggered. Boom, you're in the market for a buy, right? So that's all passive people are. Okay, and every aggressive order, so anyone hitting buy or sell, gets matched up with the next available, if you're hitting buy, you get matched up with the next available sell. So in this case, it's 8, right? And say you placed, there are 8 contracts available at 5,703. Say you place an order for 10, okay? It will give you all of those 8, and it will take 2 away from this 19. So there will be, 17 available here now. And price would have ticked up 1 movement up to 703.25. You've cleared this level, right? So really, really simple to understand, okay? And the same vice versa with, if you hit sell, you get matched up with the next available buyer, which is, 702.75. If you buy 30 right now, you're going to clear this level and you're going to take 5 from this level. So your average price is going to be, slightly in between 75 and 50, okay? It's going to be a little bit, maybe, 65 or something or whatever, right? Because you've taken a little bit off here and the majority off here. So your average price is, you're going to have a tiny bit of slippage, right? Now, that is the depth of market, okay? Really, really simple to understand, and all the sell limits and buy limits get matched up with any aggressive order, anyone hitting buy, anyone hitting sell. So the footprint is only showing you the aggressive side, right? But you've got to then think, is every person here, every buy order you see here, are these all people just hitting buy, 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 buy? No. These are going to be obviously sell limits as well getting triggered, right? If someone placed a sell limit here, for example, right, that's going to get triggered and it will look like a buy order, right? Because it'll get matched up with a buyer. So sometimes when you see in the footprint chart, like right here, right, we had this really aggressive open, loads of people entering buy, 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 the market's pushing up, lots of aggression, right? And then randomly you get this kind of massive chunk of buyers, okay? Right here, 502, really, really huge amount of volume out of nowhere, right? What exactly is going on there? Was this all just a huge chunk of random buyers just decided to come in there? Naturally, yeah, of course, there's going to be some buyers coming in, fresh people, But why did it all get executed on one area? And I can tell you why. The reason is, if you entered a buy along with all these people, say you entered, here, right? You've got a really nice entry, your stop doesn't matter in this scenario, and you entered a buy and you set your take profit here. Once the price got there, these are a bunch of sell limits now sitting at this level, right? 853. They're sell limits because they're buy take profits. Your buy order, your take profit is a sell limit, and your stop loss is a sell stop. Okay, that doesn't show in the depth of market though. All right, but it does get converted. The sell stop does get converted into an aggressive sell order. Okay, gets converted into a market order. Right, so if you get stopped out as a buyer, you're on the footprint, you're going to look like a seller. Now, if you get your profit taken, your take profit hit, you're going to look like a buyer on the footprint. So you've got to remember that, right? The footprint is showing you also people getting stopped out and take profits, right? So when you see a random chunk of buyers after a nice quick push up, there's a good chance a lot of these people are just taking profit. These are a lot of buyers exiting the market, right? Not actually really entering. And when I say, a lot of buyers, I'm talking, a lot of people who did make this move, institutional activity, actually getting the hell out. And of course, there's going to be a bunch of retail traders all jumping in as well. So when you draw a line there, does it make sense? Well, yeah, we had a high right here. That's going to be a natural, people are going to take profit there. We're also kind of, near the highs or in between the highs of this area here. It makes sense why people were taking profit there. Absolutely, it makes sense, right? Bang on, most likely to do with that high. Someone entered, a big institution, entered down here somewhere, wherever. They had to take profit up here. The market shot up, took them out. Bunch of buy orders appear on the footprint, all right? So that's why you cannot chase high volume in the footprint, all right? If you chase high volume, there's a good chance many times you're going to be caught out, thinking, oh, these are loads of buyers coming in, when in reality, it's actually buyers exiting, right? It's actually people, essentially exiting the market, right? Now, what can we see as well when you look at the distribution of volume here, right? Now, we had a bit of sideways movement. There's going to be a lot of people exiting as well, blah, 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 blah. Okay, you see how, for example, this 145 just kind of peaks, right? We get this little kind of drop in red volume as we kind of go down. Again, it wouldn't be crazy to think that there were some scalpers, people who bought up here, putting their stops there, and just literally got stopped out really quickly. That's very, that also makes sense, right? Are those, real sellers, a big institutional seller kind of getting into the market to push it down? Probably not. That's probably a lot of these buyers who have trailed maybe getting stopped out, right? Because it makes sense along with structure. Now, we see this spike in buy volume happen. And you've got to think again, why is that take profits? Now, in this case, probably not, because we haven't created a new high, right? A lot of people who are still in this trade, their take profit is probably not going to be, it's not going to be here, because otherwise it would have been triggered over there, right? It would have already been triggered. We've already passed through that area, okay? Unless hypothetically, they had to take profit higher up and they've moved it down now. I mean, I guess that could happen, but the likelihood is their take profit is still a lot higher up somewhere. And where would it be? You know, we can probably figure it out just based on structure. So we had these peaks here. There's another peak there. That's going to be probably people taking profit in around that area, right? So let's see what happened. And yeah, you know, the volume does kind of spike up in that area again. There's probably going to be some take profits again there, right? But this area here, because we already passed through it and we're trading below the last little high we had, okay, we're trading below it, it's unlikely that's going to be a take profit. That's actually going to be real true aggression, right? That's going to be true aggression, real people getting in, trying to push this market up, okay? So what do you think will happen if we get below those buyers? They're going to have their stop somewhere. Now, realistically, the stop might be below the candle. It could be, you know, it could be below here, right? We don't know where the stop's going to be, but logic will tell you probably if you got in here, your stop loss will most likely be like there somewhere, right? Really, really simple. Now, the market pushes up. Again, more take profits get taken, more people getting out the market, some people manually exiting as well. And then we have this kind of push down really quick, all right? And you can probably see just from the volume, you know, how around here, we get similar kind of numbers, 200, another 200, similar numbers. That 600 is still somewhat accounted for, I guess, but the volume kind of spikes. There's a good chance that, you know, people who entered here were trailing their take profit, right? Trailing their stop loss, right? Moving it up as we moved up, and they got stopped out as we had this aggressive move down, right? So read it again like, and remember, a stop loss will appear as a sell. So a buy stop loss will appear as a sell. Buy take profit will appear as a buy. And anyone exiting manually, I'm saying actually, you know, closing the trade manually will appear as a sell as well. Any buyers exiting manually will appear as a sell. So if you read it like a book, it starts making sense. Again, we have this huge spike in buyers. What is that, right? Does that line up with anything? Let's have a look. Yeah, it lines up to the bottom of you know, what used to be support, and it kind of lines up to resistance. It's a take profit. Institutional take profit. Someone is getting out the market. Buyers are getting out the market, right? So now that you understand, you know, what you're actually seeing in the footprint, okay, how do you actually trade it? I think that's the big question everyone's going to be asking. That's great, Sam, but how do I actually trade it? How can I make trades, right? If I can't follow high volume, what the hell am I meant to do? Well, it's very simple. What you're looking for, okay, on the footprint at any given time is efficiency. It always comes down to efficiency. How efficient is the market? That's all you got to ask yourself, right? If something doesn't make sense, bet on the other side, okay? So for example, let's take this little range we had here, right? We've got a really tight range that went sideways for a bit, okay? This whole area here, these few candles, right? The market went completely flat. Didn't go anywhere, correct? Neither buyers or sellers were really winning, right? But let's look at the volume. What actually happened in the volume, right? So if you look at the volume at the start of the range, so on this candle, we were plus 81 on the delta. Then we had negative 93, negative 130, negative 20, negative 736, negative 223. Look at all the sellers. I mean, the overall in this area, there's a shit ton more sellers than there are buyers. And you can see it in the cumulative. We started the range, right, on this candle at plus 6,780. Towards the end of the range, we were now 5,790. That's 1,000 sell contracts, right? Came in. Additional sellers came in, and they didn't push the market down. Which side of the market is more efficient in that little area? Well, obviously the buyers, right? The sellers put in so much more volume and weren't able to push it down. Buyers didn't put that much volume in and kept it flat, right? Granted, they didn't push the market up either, but they kept it flat. They kept it sideways despite the sellers being so much more aggressive. So the buyers are far more efficient in that moment, okay? And recognizing that would save you from shorting randomly here, right? If you're thinking, oh, look, it could be going down now and you're shorting it, recognizing the efficiency of the market will tell you, well, the buyers are more efficient. Maybe it's not time to short, right? And then we had this kind of spike up, right? And this is quite a big move, believe it or not. This is, 45 points. It's not something to laugh about. It's a decent sized move, right? We had this quick spike up, but then look at how the efficiency changes in the market, and you gotta really just look at the efficiency. Look at the volume now on the buy side that's been printed. 1,594 buyers in that candle. Now, don't get me wrong, it's a big candle, right? But is it 1,594 contracts big? No, it really isn't, right? There is something not right about the size of the candle for the volume that is being printed. If you just compare, if we find a candle with similar, I think the open candle was similar volume. Well, not quite the open. But yeah, look, this candle here had 1,461 extra buyers, so a tiny bit less. But look at that candle in comparison. It is ginormous, right? It stretches from high to low. It stretches 131 points. This candle has more volume, buy volume come in, and it stretches 41 points. Something isn't right. The buyers are not efficient. It doesn't add up. The volume to result, it's not adding up, right? So that would straight away, you're thinking in that moment, right, I don't know how efficient the sellers are, but the buyers certainly aren't efficient here either, okay? Maybe don't enter at the 531. We know it's a take profit. We know people are taking profit here. So buy pressure is actually being released from the market. And we know it's not very efficient. Granted, they were more efficient than the sellers in this little range here, but now the buyers aren't very efficient either. They've printed a lot of volume and they haven't really pushed the market up much. In this range here, the buyers just weren't putting in the volume. We never really got to test much of their efficiency in terms of aggression, right? We got to test the sellers a lot, but we never really put the buyers to the same test. So while, yes, the buyers were more efficient than the sellers, until they started printing volume, we didn't know how truly efficient they were. And when they did, we could recognize them. They're not actually that efficient themselves. So that would, again, be another kind of red flag if you were thinking of buying, right? So we figured out that this is, buyers taking profit. Great, right? We figured out they're not very efficient. But let's see what happens next, right? The buyers... The market doesn't go really much higher than this 531, right? The interest also kind of drops, right? And as we start trading below the majority of the buy volume, so I'd say, really kind of, this kind of area here, right? As we start trading kind of below it and through it, we're starting to see sellers come in, right, into the market. Now that's interesting, right? The sellers seem to be quite efficient. Look at the volume they're printing in comparison to the buyers. It's a lot lower, but the candle's bigger. They're moving a bit better. For once, for the first time in a while, the sellers, seem to be efficient, right? They're able to actually make movement happen, decent movement, with less volume than the buyers. That looks good. Do you know what I mean? That looks good to me. Definitely, you can think about, okay, maybe it is a sell. Maybe I should be selling. Right? And you can have a very tight stop, just above the candle, above where all the sellers came in, and let the market ride down, right? So that's not the only way to trade it, okay? Because looking at just the efficiency can change very quickly, right? Because the efficiency comes down to absorption. Now, absorption is very, very simple, and it comes back to the depth of market, okay? You see all these orders in the depth of market here. The reality is, on this, take these 36 sell limits. The reality is there's probably more available than 36, right? 36 is what's shown, but there's some institution probably placing an iceberg, especially at key levels. Now, an iceberg is where they will show maybe, 30 contracts available, sell limit, and the market will go up into it, execute all 30, they get ordered, and then some algorithm will immediately, I'm talking microseconds, replenish that area with another 30, right? And then the market trades back into it, the 30 gets executed, the algorithm replenishes another 30. And that keeps going until their full size, until their full order is filled. And their order could be, 500 contracts, it could be 1,000 contracts, who knows, right? But essentially, it's an iceberg order. That is absorption, because they don't print the full amount. If they printed 500 on this level, right, no one's going to buy. Would you buy into 500 sell contracts sitting there? No, because it's going to take more volume to push past it. I wouldn't want to buy into that, right? There's a big giant institution sitting there. No one will buy. So this institution won't get their order filled, and no one wins, right? So they got to do an iceberg, be a bit sneaky about it, right? Only show you a little bit of the order, all right? And as it trades in, they'll replenish it and replenish it and replenish it and fill their order that way. So how do you spot that on the footprint? Well, you spot it again by something that doesn't make sense, right? This right here, wherever you see lots of kind of volume come in the market, but absolutely no movement, right? That's absorption, right? There were a ton of sell limits here, right? And there were a lot of buyers coming in, and the sell limits on this side, whether it was take profit orders, doesn't really matter, right? Nonetheless, there were a bunch of sell limits on that, on these areas, just absorbing all that buy pressure, right? They couldn't push it up any higher. Now, if sellers start coming in and start pushing it below all those buyers, that is a sign this might start dropping, right? So you really want to see, and a lot of people call it, being trapped in the market. Oh, a bunch of buyers trapped and they're getting squeezed out. That's another way of looking at it, right? Because that's essentially what's happening, right? Bunch of buyers happened, right? They're now, bought the top. We start moving down. They're going to get squeezed out and they all start dropping off as well, right? So that's essentially it. That is literally how you read the footprint, okay, on a day-to-day basis. Now, you want to combine it with logic, and I always say that with logic. Figure out where people are taking profit. Where are people's stop losses most likely going to be, right? And what you see on the footprint, does it line up to those areas? If you're seeing something that doesn't line up and we hit a high and there hasn't really been a spike in buy volume, probably not that much, but probably that institution is still in the market and they haven't taken their profit yet. Okay, it might still be all right. Do you know what I mean? You don't have to get out, but you want to really get out with the big players. If the big players are leaving, time for you to leave too, right? You don't want to kind of fight against them in any way because they have the volume. So if you read it rather than just, loads of people buying, loads of people selling, but actually read the story behind it, it starts becoming clear. And the efficiency. Always look at the efficiency. Is what you're seeing, does the volume you're seeing make sense to the movement, right? Or the other way around. Does the movement you're seeing make sense to the volume being posted? If it doesn't, you really don't want to be entering in that market, right? You can chase high volume, absolutely. But you've got to chase it where it logically makes sense, right? After, a bunch of people have taken profit, and the market isn't moving up anymore, and a bunch of sell volume comes below all those buyers, and the sellers seem to be quite good at pushing it down, yeah, you want to chase that volume now, right? Because that seems like legit volume, okay? You don't want to chase the volume where it doesn't add up. So most of the time, if you ever watch my lives, if I'm in a buy position, I see loads of buyers kind of spiking, and it gets really big, I always say, okay, I really do not want to get below those buys. I want to keep trading above them, keep push, because I know that could be people taking profit and the pressure is getting released. If we start trading below and it starts faffing about, I'm out. The institution exited too. I'm not going to hold it either, right? I'm not going to hope now. They're gone out the market, so am I. Okay, so that's kind of the rundown on how to trade the footprint. Okay. You're really just looking at, does it make sense to you? That's all you're kind of looking for. Try figure out the story. Don't care too much about, you know, the individual numbers. Oh, that's a big number. It only matters, only the follow through matters, right? If it's not doing what it should be doing, or logically it should be doing, then it's not, something is not right. There's absorption or something of that kind happening, right? So I hope that kind of helped. Look at the footprint, the delta footprint, okay? Now, the delta footprint doesn't really show you the true volume, right? You want to see the bid and ask for that, buy and sell, right? Because then you can actually see the volume. Like, for example, there was a lot of volume here. You know, 526 sellers, 531 buyers, right? But the difference between them was only 5. So the delta looks like, that's low volume on the delta, but actually there was a lot of volume being printed there. And the way you see that, the reason, and that's very useful, you know, to know where there's a lot of volume, of course, is very useful. But the way you trade it in with the delta profile, the delta footprint, is by looking at it in real time. If you watched that cluster develop in real time, right, you would have seen the numbers go really, you know, constantly, you know, back and forth. You would have seen 100 plus and then back down to 0 and then maybe 200 negative and then back up to 100 plus. And you would have seen that this big kind of change in numbers. And you know there's a lot of volume coming in because you're kind of making a mental tally, right? You're like, oh, 100 buyers came in. Oh, no, 200 buyers. Oh, 200 sellers, 150. Do you know what I mean? Whereas when not much is happening, say this number just kind of stays around 5, might go to 7, might drop down to 3. You know there's no volume there, right? Do you know what I mean? So watching it in real time, especially around key areas, you know, you don't want to watch every second of the day just staring at the chart. That wouldn't make any sense. You want to do it around key areas. And if you want to know the key areas I trade that have an unbelievably high win rate, there's a video I will link in the description on my channel. It's the video I did before this. I show you my volume profile video where I show you the true zones that have the best response, you know, and how to trade them, right? How to truly trade, you know, any kind of zone. Like and just to give you a quick rundown, I like to draw my volume profile from legs, right? And I like to find gaps in volume. I explain exactly how to find them, how to draw them. Like there's a really nice gap in volume. You know, have a big volume and then the volume drops and then a big volume again, beautiful little gap, you know. And as we got back, you know, I only did from the bottom, from that little leg down, but as we're retracing, kind of like a Fibonacci tool, you know, look, it usually, high chance you're going to get a good rejection, and you had a really nice rejection in that gap of volume, and boom, 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 the market moved down for a bit. Definitely take a trade, got another one, boom, 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 boom. And then when it eventually broke through, you're looking for, you know, there's only 2 ways to trade them. You're either looking for a rejection, or if it blows right through, you're looking for a retest and a continuation. Really simple. And we got that. We blew right through, retest here, retest here, retest here, continues back up, right? But I show you it really in depth in that video how I draw them out, what I'm looking for, etc., etc. That's just a quick rundown to show you, look, it's a bit different to most things you've seen when it comes to volume profile. I promise you that. Okay, it's something I've developed for many years. And yeah, it's a very, very nice thing to trade. But I hope this footprint video kind of helped. It's really better to do it more in real time. I will make more videos about the footprint, doing it in real time. Unfortunately, I can only record this weekend and the market's closed, so I can't show you real-time footprint movement, but I will be doing that. So do keep your eye out on the channel. But I hope that helped, everyone, and thank you for watching. And catch me on the lives as well. I'll be live every day, Monday to Friday, trading the NQ New York Open. Do subscribe, tune in, because it's well worth it. But apart from that, thank you guys for watching. I'll see you again very soon. Take care for now. Bye-bye.